What's up, guys? As always, I am not a licensed broker or financial advisor, so do not take my advice and buy, sell, or trade stocks. This is just something that I have done, and this is a trade that I'm involved in currently. This is all my opinion, and always do your due diligence when you're trading stocks. So let's get into it. This is Ford. We bought it at the break of this trend line somewhere in here. This one there. So regardless, I was buying off this trend line and not the support levels. Obviously, the support levels help me dictate my price, but they did not. It's not exactly where I bought off of. So I got in at like 842-ish, and then I started scaling in more at a little bit higher level. But this is the basic trade. We have a long downtrend, and if you guys are curious, Ford has been in a downtrend for a long time. It's not a particularly great long-term investment other than holding it for dividends, because Ford has a high, or what some people would consider a high dividend payout at like 15 or 16 cents per share. Meaning every time that they pay out their dividends, which is like every 3 months or something, you get 16 cents back for every share that you hold. But other than that, we are looking to trade this stock. So I bought it off the reversal of this trend line. Saw that it had broke out here. So I was just waiting to see if it was going to respect the support levels, and it did. So we bought it somewhere early in these levels here, and it did kind of fake us out a little bit, but we remained strong with a pretty safe stop around this $8 mark. I just didn't want it to come back down to these levels. And then it had a cup and handle here, so we knew that in order to progress, we needed to break $9. And not only did it break $9, it never came back to retest it. So this was a really textbook trade. We never had to set a safety net down here in these levels, which I normally would do. I would tell people to wait for the confirmation of the $9 break and set your safety somewhere in this level or even below the 850 if you have the tolerance for risk. But we never even had to do that. It simply just kept trending higher. News came out and it just gapped up, and we're still in this. But there is a long-term resistance level here at 850 that we have to wait for this to break out of if it's going to. There's no guarantee that this is ever going to break out. This is a really steep and probably overextended gap up at this point. I really expect this to kind of come down and retrace back down into these levels and hopefully create a pivot off of a support level and show us that it wants to stay in these levels. We do have a stop limit set somewhere here in this 950 range. I'm probably going to lower it down here to this 930 just for tolerance. I have enough shares to make profit even if it comes back down. And we could take profit up here at the resistance levels if we really wanted to, but I'm just going to let it play out and see what happens. I'm not really looking to make $1 million off this trade, and I'm not day trading anymore. If I was day trading, I'd probably already be out of this trade just to take my profits, run, go on to the next trade. But I'm kind of more swing trading this now. And so what I really want to see is, like I said, we want to see it respect this resistance level a couple times, really set up and consolidate in these areas, and make another pattern for a bull run up higher. If it can do that, I really expect this to go up into these levels again. So we're way down here, and it can come all the way up into the $12 range. So that'd be another $2 of profit, but I don't expect that to happen anytime soon. So this is starting to turn into more of a longer term trade, even though it was taken as a swing trade. So this might be one that I end up holding on to for a long time. As you can see, it had a huge gap up. So now we have this huge range to trade in. There's a lot of risk and potentially no reward if you got in late. But this really kind of shows how easy this trade was once it broke resistance levels. Anywhere in here was a proper buy-in level. And it just hasn't came back down. So that's it for Ford. We are still holding on to it. We're going to keep it for who knows how long, just until the chart tells me not to keep it anymore. Basically, that's all I'm doing now is watching this chart, watching very primitive signals. I'm not using any fancy triggers, any fancy, markers or indicators or anything like that. We're just watching price action. We're watching the chart. You can see here on the longer term chart, $10 is now kind of our level to watch. But in all reality, 950 is a much stronger support. So we will continue to watch this for quite some time. And as long as it doesn't come back down and dip below these support levels, as you can see, these are like super long-term levels now. So it should find support and respect some of these levels, but we also have to respect this. So that being said, my target right now is for this to come up into these levels. If this breaks out, then we get a whole chart reversal, and this becomes a whole different trade for long-term investing. But being a dividend stock, I really don't expect all that. There's so much resistance in this. So we'll just see how this plays out. I could draw these trend lines all day. There's so many in here, so many levels of resistance, so many levels of support. You can see that it's at a long-term resistance level. It's hit this several times. It's respected it. It's bounced off of it. It's going to trade off this level at some point. Whether it goes higher or lower, that's what we're waiting to see. All right, guys, that's it. See you later.